Hello and welcome to Livewire Markets. My name is Stephanie Gardner. Today I'll be sitting down with Allison Fisch from Pzena Investment Management. Allison will be talking to us today about emerging markets and some of the risks and opportunities in that space. Allison, thank you for sitting down with Livewire today.
Thank you for having me.
It's a pleasure. So we'll get straight into it. You have an interesting background. You studied psychology at Dartmouth. You started out at McKinsey before joining Pzena, and you then helped launch the EM Value back in 2008. That's a pretty interesting origin story, one that I haven't really heard before. How have those experiences shaped you as an investor?
Well, I'm shocked that you don't meet a lot of investment managers with a psychology and drama background. Frankly, in my view, it's the perfect education for doing this. For me, really landing in investment management was kind of a happy accident. After school, I went into management consulting where you try to solve problems for businesses. And I really enjoyed that problem-solving part. After that, you spend several months creating charts and communicating around organizations, which to me was a less happy part. So the beauty of investment management, and particularly the way we at Pzena invest, which is about bottom-up, company by company fundamental investing, is you really get to understand businesses and analyze how they create value, which is an incredibly fun job.
Was 2008 a difficult time to launch the EM Value?
Yes and no. I mean, it was a time when, markets were very, very volatile.
Yes.
We were coming off of probably the greatest boom in emerging market equities ever of the 2000s, where China was urbanizing and industrializing the country at a pace and a scale the world had never seen. And you had this sort of rising tide lifting all of emerging markets. And then the interruption of the global financial crisis really put a spanner in the works, I guess you would say. But a lot of that, though, was coming from the developed market pain. So it really created a great opportunity in EM as well on valuation without some of the destruction that we saw on the developed market side.
So Pzena's process is built around normalised earnings. But how do you define normal when EM cycles are all over the place?
Yeah, so it is industry focused, right? We organize the team by industry. And so when we're looking at a certain company, it's how does this industry create value? And you can think of that normalized earnings as a sort of mid-cycle, what a company should earn in a relatively benign environment. So if a stock becomes cheap relative to that metric, it means something bad is happening. And when you can view it through this sort of global lens of, what does this business do given the industry framework that it's sitting in, that really helps you zero in on what that true normalized earnings number should be.
So China, Korea, and Brazil dominate your portfolio. What's driving conviction in those markets right now?
Valuation. Our portfolio is built bottom up, but we start with a screening tool that points us to the cheapest parts of the market. And that screening tool has been screaming China at us for most of the last 5 years. More recently, though, as China has recovered somewhat, that opportunity set has really opened up and pointing at us to new areas of controversy, like Brazil, which has become a pretty big weight in the portfolio as well.
We've seen big dispersion this year. North Asia is booming on AI. India is lagging. How are you navigating that?
Yeah, again, for us, the portfolio is built bottom up. So it's all about what does this opportunity set look like? What companies look interesting to buy relative to their own valuation? So for better or worse, because of the valuations in India, we have very little exposure there. So for a number of years, that was a headwind because India has been booming. This year, with India giving up some of those gains, it's actually been a tailwind in our portfolio.
So Samsung, Alibaba, Baidu, they're all value names tied to AI. How do you draw the line between value and growth here?
Yeah, again, it comes back to the company's earnings and the valuation that's put on those streams of earnings. When we look at a company like Samsung, it's really about the strength of their DRAM memory franchise over time, where they've been the dominant player for decades. Now, more recently, they've hit a bit of a speed bump in getting behind in some of the high-density bandwidth areas. Hynix has sort of zoomed ahead. Now, more recently, it looks like they may be catching up, which has led to good stock price performance this year. And again, the need for that particular product set is about AI and the massive CapEx going on in the space. We see it too. I would say we're more skeptical about whether there'll be enough revenue and enough profit to justify all of this spending. But in the meantime, there are definitely pockets of misvaluation that we're taking advantage of in emerging markets.
You've added names like B3 in Brazil and Wizz Air in Europe. What do they tell us about where you're finding opportunity currently?
Yeah, I mean, those are two great examples of sort of what's happening right now in the cheapest part of emerging markets, because you have B3, the Brazilian exchange, and Wizz Air, which is an Eastern European startup low-cost airline. Both of these are cheap for totally different reasons, both company-specific as well as what's going on in their broader operating environment. And that, I think, is sort of the beauty of value investing in emerging markets, is you have all of these different countries and all of these different businesses. So at any given point in time, it's not hard to find a lot of different controversies. And that's what you can really take advantage of in exploiting that valuation.
Every new position needs unanimous PM sign-off. Has that discipline ever cost you a winner or saved you from a loser?
I would say both, to be frank. I mean, having a unanimous PM sign-off when you're looking at a PM team of 3 or 4 people is a pretty high bar. But when you take a step back and you think about it, that bar is justified, right? In our emerging markets portfolio, we're starting with a universe of 1,000 stocks. Then we're narrowing that to the cheapest part of the market, which is the cheapest 200. And then from among that, we're creating a portfolio of 40, 50 stocks. So there's a whole lot that you can say no to on that path. And frankly, you should, because if you think about it, the cheapest part of the market is full of great investment opportunities, but it's also full of every company that might fail.
Yeah.
Sorry to share
you
that,
don't want that.
but it's just true. And so,
Yeah.
so making sure that you have the absolute conviction and the absolute buy-in of the entire team is really critical.
So looking out 3 to 5 years, which region or theme in emerging markets do you think will surprise investors the most, and why?
Any theme in our portfolio would probably surprise investors because, right, we're investing in the parts of the market that have been left for dead. And that's what we do over and over again every day. So when you look at how our portfolio is positioned today, on the sector side, our largest exposures are financials, consumer discretionary, information technology, really highly cyclical parts of the market, which is where we're finding that cheapness because there's all of these sort of question marks about the direction of global growth and company profitability. Flipping over to looking at the portfolio regionally, as we discussed, we have big positions in China, South Korea, Brazil. So I think, all of these are areas where we see opportunity that the market just isn't pricing in.
Thank you for coming today, Allison, and sitting with me and discussing all things emerging markets.
Thank you for having me. It's been a pleasure.
If you enjoyed that interview, be sure to give it a like and subscribe to our YouTube channel where we're releasing new content every single week.